Hello and welcome to Pro Trader Strategies Market Commentary for Friday, October the 7th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolio, and therefore what I'm doing could be counterintuitive to what you are already doing. Anyway, having that out of the way, we've got a lot of economic data to go over and a lot of things to talk about today. Bit of a crazy ride going on right now and overnight if you were up. But let's get into the economic data. We had German industrial production come in better than expected at 2.5%, was expected to be 1.1%. French industrial production came in at 2.1%, was expected to be 0.7%. So therefore, so far there, that was looking pretty good. But then in Great Britain, we started getting in manufacturing production numbers, and it came in at 0.2, lower than the expected 0.4%. Their goods trade balance actually came in a lot worse than expected at 12.1 billion versus a negative 12.1 billion was expected to be negative 11 billion. Their industrial production also came in lower than expected at 0.4%, was expected to be a positive 0.1%. That caused a lot of craziness overnight in the British pound versus the US dollar, which I'll get into here later on in the market commentary. But let's get these things banged out and out of the way. The only thing in the United States we got was unenjoyment. Yes, today is unenjoyment, which is the non-farm payrolls. It is the big number that most economists look at for the hiring of U.S. workers, and the average hourly earnings came in line with expectations at 0.2%, but the non-farm payrolls employment change came in at 156,000 hires, was expected to be 171,000 hires, so a lot lower than expected there. That would be a little bit bearish. Also, we saw the unemployment rate uptick to 5%, was expected to be 4.9%. So that number reflecting the unemployment change increasing. People started thinking that there was going to be some employment, so people probably started coming off of that discouraged worker number, which means that they had fallen off of the unemployment insurance. If you're not applying for unemployment insurance, you are becoming a discouraged worker, even though you are still unemployed. The numbers or the statistical is not considered unemployment at that point in time. So it looks like that's what we're starting to see a little bit, but hiring a bit of a pullback. The rest of the day, we also did get final wholesale inventories. Was a drawdown of 0.2%, was expected to be a drawdown of 0.1%, but that one's that number that I don't really like to look at too much, but it's worth noting anyway. And we also have Fisher, Mester, and George speaking today as FOMC, and then later on after the close we have Bernard speaking also. So just keep your eyes out for that. They're really going to probably, some of them will really start talking about their thoughts on what the Fed should do with interest rates. A couple weeks ago, they were on lockdown and not really allowed to talk about it going into that FOMC meeting, but now they are free to give their opinions, if you will. Anyway, on to the overall markets. A bit of the bearishness in the non-farm payrolls causing crude oil come back down below that $50 a barrel area. And if you notice right here, this is a bearish engulfing pattern. A couple of things lining up right here. We came up, tested the value area high. It rejected it. I talked about that quite a bit. It needed to really settle up and above there to be bullish. But today with the non-farm payrolls, or the unenjoyment number, which is what we used to call it on the floor, that is a bearish engulfing pattern at this point, which could indicate that the market is a little overbought at this time. I'm actually going to be looking at placing a poor man's covered put around this, which is somewhat of like a synthetic short, but we're limiting our risk to the upside and capping our profitability to the downside. But at that point in time, I don't really care about that because I want to have this as a limited risk strategy, so this will work for most people. I want to limit myself to the upside if we start seeing a real push higher, but I think that it's time to look to implement a short position for me anyway in crude oil. So I'm going to be talking about how to build that out today. So go to protraderstrategies.com and you can find out about how to do a poor man's covered put in something where you are a little bit more bearish. On to gold /GC. I talked about this. It got below that 200-day moving average, really starting to look pretty bearish. Today it's found a little bit of support. I don't know if it'll continue on, but at the end of the day, we're below that 1300 psychological level. We have this cross on the moving averages. We're below the 200-day moving average. Not looking too good for the bulls and my strangle that I have on in that. I'm going to have to start getting a little bit more aggressive if I don't see a turnaround in there. So keep your eye out for that if you are in that trade. Bonds right down to support, trading down about a half a point right now, just below the point of control, which is where the most time and volume has been spent. As you can see, this Fibonacci 50% retracement level has acted as support in the past and looks to be acting as support today as we speak. Haven't seen much of a turnaround going on in there, despite the fact that it looks like equities are starting to really accelerate to the downside. We've got Dow Jones Industrial Average down 91 points. Still stuck in this bit of a range, but I kind of actually expected today to be a bit of an up day going into it, but this unemployment number is throwing the wet blanket on the equities. NASDAQ down 30 points on the day and it has just in probably the last 15 minutes accelerated down past yesterday's low. E-mini S&P is the same situation here, down 16 points on the day, and the acceleration is happening in the last, I guess, a half an hour now. But as you can see, we kind of broke through this value area low that we've seen for the last several days, and looks like the longs really started to push to get out, and we saw this acceleration to the downside. This is the chart. This is a 15-minute chart of the E-mini S&P. Now, this is what I was talking about with the Great Britain pound. This is the ETF GBP, and that is the British pound. We can see that we just gapped lower on this, but if we look at the British pound versus the US dollar, this basically will encompass what happened last night. And as you can see, a massive drop in there, over I think it was right around a 6% drop in the British pound, and it really happened quite quickly. We could go to like a 5-minute chart on this and look for it. As you can see here, this was in a matter of seconds, basically off of the economic data that was released, people starting to worry about the exit of Great Britain from the euro, whether or not that's going to really hurt them. The algos got in there, probably got it below where some people had some stops in there, and all of this really happened within 5-10 minutes, maybe at most, and then pretty much came back in line for the better part of the night. We did have another blip, probably when some people started waking up and realizing what was going on and seeing that kind of action, just kind of pulling the plug on it. But the algos really got in there and started pushing, and I'm sure there were some guys here in the United States. We have the overnight desks, and those guys are there to monitor the algos and stuff like that, and I'm sure those things were screaming in everybody's ear, and there was a bit of a panic for a little bit of the better part of the night. Kept those guys up for a while. Anyway, that's about all I got for you guys today, other than, so one other thing I did was the Apple trade today. And if you remember in Apple, I'd taken off my October 105 puts just at the beginning of the week. I took off the October 111 puts today that I had on also. I originally collected $1.01 for that. Bought them back for 50 cents today. That was earlier on this morning, but I think it started coming off a little bit. It's still in positive territory, but that was 50% of my max profit, which is what I talk about in these webinars. I give all the rules around what we need to do to be able to beat the probabilities, and I'm going to talk about that today in the poor man's covered put. It's a really good one. It's a great strategy, especially if you are long a lot of underlyings. You need to get some short deltas in there to protect yourself to the downside. This is going to be a great way to implement something like that for a lot less margin than it is to go out there and short a particular stock or underlying. You also don't have to pay the dividends, and there's a lot more benefits that go into that. So check it out at protraderstrategies.com. And that's all I got for you guys today, other than have a great weekend. And if you can't take that, take it easy.